So hello everyone. I'm Jonathan Weiner. I'm a professor of science reporting here at Columbia Journalism School. Dean Cobb couldn't be here this evening and said to pass along his regrets. On his behalf, I'd like to welcome you all to Pulitzer Hall and the Journalism School. So welcome. The Journalism School and the Climate School have a common interest in educating our students about the climate crisis, teaching them how to tell meaningful stories about the many issues it touches, which is, as we all know, all issues. We have wonderful and ongoing collaborations. Professors from the Climate School have served as our climate expert in residence and have taught in our classes and in the Science MA program, and are often interviewed by our student reporters as they work on science and climate stories. I'm also delighted to share that we're very lucky to have had climate school students take some of our courses. They have brought so much depth to discussions and have been a joy to work with. We hope this event, Degrowth versus Green Growth, Can Capitalism Solve Climate Change?, marks ever more collaboration between our two schools. Thank you to Dean Abramson and the Climate School for partnering with us on this dialogue series. And now I'd like to hand it over to Dean Abramson.
Good evening, everyone. Thank you for being here. As Jonathan said, I'm Alexis Abramson, Dean of the Climate School. We're excited about all that's going on at the Climate School, particularly the partnerships that are emerging across our academic efforts, our research efforts, and the impact work that we do. And in particular, I want to take a moment to recognize our partners at the Columbia Journalism School. This series is stronger because of our collaboration, really bringing together the Climate School's research and solutions focus with journalism's commitment to public service, clarity, and asking the questions that help us better understand what is at stake and what is possible. I want to thank our panelists for agreeing to be here and to share their time and perspective with us. We know how much is competing for your attention, and we're genuinely glad that you are part of this conversation. So the goal of the Perspective Dialogue series is straightforward. It's to create space for rigorous, accessible dialogue about the biggest climate questions of our time, grounded in evidence, informed by real-world experience, and oriented towards solutions. So what we're aiming to do is convene voices that don't necessarily always share the same starting point, but who are willing to engage seriously and constructively, because progress depends on dialogue that is both honest and actionable. So now we'll move into a moderated conversation, and we'll reserve time at the end for questions from the audience. We'll take questions both from those of you here in the room, and we also have people online. So to start things off, to align with our theme, I'm going to go to the panelists and ask you to keep your answers short, sort of a lightning round, if you will, of questions that I have for you. I am sure we will get into the meat of what you have to say, but just keeping things to maybe under a minute or so. So, thinking about degrowth, thinking about green growth, maybe starting with Archana. Can capitalism solve the climate crisis?
Absolutely. So that's now you know where I sit. But just to kind of give perspective, I'm coming from an emerging markets lens and a sustainable emerging markets investor lens. And I have experience at both investing in a way that green growth has led to both equitable growth and also decarbonization, but also lived experience of what degrowth can do to a country, and how, in my view, it's not really a solution. So my answer for emerging and frontier markets, absolutely, green growth is a reality.
Thank you. And I neglected to introduce you, so let me do that. Archana Shah is a portfolio manager for Red Wheel's Sustainable Emerging Markets Strategy and leads sustainability for Red Wheel's Emerging and Frontier Markets team. She brings more than 20 years of experience across finance and impact, with a focus on how the transition plays out in emerging markets. So next, we'll turn to Chris. And Chris Vandervoort is the founder and CIO of, do you pronounce Juno? Yeah, Juno, a circular interior wall company. And as a buildings person, I'm so fascinated by that. But and a co-founder of the Circular Value Institute, which helps quantify value in circular business models. His work focuses on what it takes to make circularity real in product design and in markets. So your 60-second answer to that question?
So I'm also on the green growth side, and I think for me the reason why is just like my company Juno is Jules and Noor. Those are my two kids. My kids will ask in 20 years, okay, Dad, climate change, what did you do about it? So I need to take action, and what is the fastest action that I can take is work within the existing system. The world works on finance and economy, so use that system, study it, understand it, and hack the system so that we get the sustainable business model growing faster than the unsustainable business model, and that's how we outcompete unsustainable business models. That's how I look at it.
Thank you, Chris. Next, we'll turn to Kate Aronoff, is a staff writer and climate reporter at The New Republic, covering climate, energy, and the intersection of business and politics. She is the author of Overheated: How Capitalism Broke the Planet and How We Fight Back. So, Kate, can capitalism solve the climate crisis?
Well, I think the subtitle of my book maybe gives you a sense for what I'm going to say. But I'm going to do a really annoying thing and say, what do we mean by capitalism, right? Do we mean a collection of sort of abstract market forces? Do we mean the sort of sum total of private actors in the economy? I don't want to get us too far down that definitional path.
We'll get to it.
We'll get to it. But I would say is that I think capitalism can do quite a lot, and just realistically, as someone who is a socialist, who does not agree with the things that capitalism has done to the world, that we are not going to escape capitalism in time to deal with the climate crisis. And so I think it's worth thinking very precisely about what it is that capitalism can do, what it is that it can't do, and what we mean by that. Not that we should spend too much time on that, but what do we want market forces to do? What do we want the private sector to do? And what kind of support do they need to do that? And then what is the role of the public sector to fill in around the gaps or to do what the private sector simply cannot?
Thank you. And next, Aniket Shah is Managing Director and Global Head of Sustainability and Transition Strategy at Jefferies, where he leads sustainability and ESG integration within investment research. He also teaches at Columbia SIPA and in the MS in Climate Finance program, which we're very proud of. So,
and at the business school. So this is and let me just start by saying it's so nice to be here. I started my career 17 years ago at the Earth Institute, and so Columbia is a very special place to me. And I see Jennifer Genrich in the back, who I worked with a long time back, and it's just wonderful to be here. To answer the question, can capitalism, which definitionally you're right, we should ask the question, what do we mean by it? And I'll just define it as the private ownership of the means of production. Can that solve climate change? Yes, it could, if government policy is written in a way that steers certain outcomes. So the mechanism of capitalism could potentially solve this. If you put a $300 per ton carbon price, yeah, you laugh, but in some countries in the world, it's getting closer and closer to that. That's a public policy decision, not a capitalism market forces decision. Now you might ask, in a capitalist system, can a $300 per ton carbon price, $400 per ton carbon price come about? And what kind of economic growth comes on the tail end of that? These are all questions we will discuss. But Kate's point is exactly correct. Let's be very precise about language here. And let's be clear about what about the market we are frustrated about and what about the state we're frustrated about, and talk about specifics. And just so it's very, very clear, market forces as a means of allocating capital is fine, if government sets very clear boundaries and very clear direction.
Right.
And that's what we should be talking about.
Right. We will build on that. Maybe I'll turn to Kate, though, first, because you sort of set us thinking about capitalism, and you see this in your reporting as well. So maybe you can kind of dive in a little more to what is the main way that capitalism and the growth imperative that are keeping climate action from solving the problem. So kind of ground us in that, and what might need to change for decarbonization to stick.
A really small discrete
I know.
question. Yeah.
In a minute.
We got to get all the sides in. So yeah.
I'll talk about one particular sort of hobby horse of mine that I've been a little obsessed with for the last couple of years, which is that I think that since climate change sort of became an issue in the United States, it comes about, in the 90s, sort of bursts onto the scene. We, have the sort of start of IPCC meetings at the UN level. You get an inconvenient truth some years later. 2006 sort of brings this issue. James Hansen, of course, familiar to people here, gives his testimony before Congress. That all happened sort of as what we call neoliberalism, which is an equally complicated term to capitalism, is sort of at its zenith, right? It's sort of the Berlin Wall has fallen. It's the end of history. And so the way that we think about climate action becomes shaped by that historical moment, right? And so people, for, I think, understandable reasons, begin to think that the solution to climate change is to inflate the asset price of a series of greener assets, right? So low carbon goods. So what do? We can put a carbon price on certain things. We can sort of tweak the market so that the private sector is properly incentivized to unleash decarbonization, unleash a sort of reduction of greenhouse gases. And we've been living in that moment since that time, since I was born, effectively. And I think what we've seen is that politically, at the very least, we can talk about sort of technically, physically, does that work? Politically, that does not work. A political system that says we are going to inflate the price of certain assets that are good, that are some positive for the planet, and that will produce the sort of change we want to see, that will create the sort of legislative energy we need, the bipartisan buy-in in this country that we need in order to pass the kind of legislation that would be necessary to unleash those market forces. That feedback loop just has not happened. And so I don't have a clear answer to that and sort of what comes next, but I think we really need to sort of shift away from thinking about the goal of climate action as being the inflation of certain asset classes, which is a good thing to do. I'm not saying that's not a good thing to do, because we do need those assets. We need those assets to be built. But that is not a political solution to building the sort of action that we need at the political level to do anything meaningful about climate change. And we should talk about the idea of solving climate change too, because I think that is its own sort of basket of worms.
Maybe Annika, you could kind of respond to that a bit. Where thinking about all that Kate has kind of laid out, where would you say that markets actually do well in this context? Could you give us some insights to that?
I mean, look, folks, $2.3 trillion went into low carbon CapEx last year. That number was $380 billion in 2015. 70% of all incremental energy, not power, of total energy CapEx globally is now low carbon. Now, how is that happening? It is happening through a combination of state and market forces. Out of that 2.3, and this is why specifics are very important, not just high level conceptual, where does that $2.3 trillion come from? 900 billion of it is China. Is China a capitalist system, or is China state driven? I'm sure there are China experts in the room. There are hundreds of them here at Columbia. A good China expert will say it's a bit of both. In some ways, it's hyper capitalism there. In some ways, it's hyper state. It's both. What is the goal of climate action? The goal of climate action, solving climate change, is about rebuilding the capital stock of the world. That's the basic way you should think about it. It's not about the dollar, the value of the stock price. It's physical assets. You're building something physical. That requires, again, this incredible connection between state and market forces. And if you have the right incentives, the right risk capital, and so on and so forth, you can start seeing what you're seeing in China. You can see what you're seeing in Europe. Europe is seeing significant decoupling between emissions and growth. So it is possible. It is absolutely possible. The question about the United States and all of this is a tricky one. And if I may, now that I have the microphone, I'll just say very briefly, in general, we all over-obsess with the United States when it comes to climate. Let me speak specific numbers here, because specificity is important when we talk about this stuff. The US is 12% of CO2 emissions. The US is 18% of low carbon capex. The US is 20 to 25% of global GDP. Okay, it's not nothing, but it dominates people's thinking about this topic, which is a real fundamental intellectual error that I see many of my clients make. Oh, nothing's happening on climate, Annika. Look what Trump. No, the world is a lot more complicated than that. One other thing that I think we have to be very important, because I've read all the literature. I've hosted all the degrowth people on my platform at Jefferies. I know all of them. Georgios Kallis, Jason Hickel. I know all of them, and they're, by the way, wonderful people, and they make very good points. The other part of this, which I think is very important, is how seriously do you take planetary boundaries and how seriously do you take limits? What do I mean by that? If Tim Lenton is right about tipping points and Johan Rockström and Jim Hansen and others, then you actually need to have much more state control over all of this, and you just have to shut off certain activities, because if we tip over into a different type of Earth system, the planetary scientists here know a lot more about this than I do, then we're in a fundamentally different world. So then you have to recalibrate state versus market, right? So this is a calibration issue. But just to answer very specifically, the market does fine of allocating capital if the incentives and the rules are put in place correctly. That's the job of policymakers. And it's not like we're starting from a blank sheet of paper. There's $2.3 trillion a year. Just think about that number. Think about 2.3 trillion. That is going into the stuff that all of us want for low carbon. That's already happening. So it's not like we're starting from scratch.
Great. So that was a lot there, and I think that some of the quantitative information absolutely important to as we kind of really think through the pluses and minuses of all of this. And one thing you said, you talked about the incentives, right? And so maybe I'll turn to you, Chris, because I know you think about the incentives piece and specifically around those assets that we've been talking about and the value of those assets. And as we mentioned in your bio, you're interested in the circular economy. So how does the circular economy play a role in mitigating climate change and moving us towards a clean energy future? And what has been a change that you've seen maybe recently that is helping us kind of move that forward with respect to the circular economy? And maybe if you also think about sort of what has been hard to move forward because the system is maybe a little bit stuck.
Okay, that's a lot of questions.
It's a lot of questions. Circular economy, incentives, building off
so
of
what
what
is
Annika
circular
said.
economy? That's the first thing. Why is it a solution to climate change? Is in a linear economy, you produce something and in the end it goes in the trash and it's gone. The value is gone and you emitted CO2 to do that. In a circular economy, you bring it, you close the loop and you're going to reuse it, hence keeping the value, the economic part, and also saving CO2 emissions. Very simple in that way. For that, you need to have products. You're going to reuse physical products and so on. And here you can, and I want to deep dive a little bit in what you were stating. I come from Europe, maybe you hear it. So I live in Europe, and there is a lot of incentives, and there is a lot of government grants for all the sustainable thing, but it doesn't work. It just doesn't work. Now nothing scales. It's so hard to scale something. And this is because they are throwing away money at it, they're just throwing away at anybody with a good story. And that is where then the capitalism part becomes very important. What you need to do is you need to measure the value of a circular product. That is what the Institute is about. How valuable is it to reuse it? How profitable is it to reuse it? So you need to have those economic drivers to have for a business case how does that, is it profitable to reuse? And in a state-led government, you're going to have the case that let's just try, it's a nice story, we want this. In a capitalism-led, is it profitable to reuse? Yes, let's put money behind it and it will go much faster. Instead of having 100 experiments, you're going to run the 5 experiments with the highest chance of success, and those companies or those ideas, they will grow, and the complete climate thing becomes more a success case, because that's the issue also, I think, with climate change discussions. There are too many failures. You were also mentioning this when we were on stage. I invested in circular economy things and all my money is gone, so now I hate circular economy. Yeah, maybe understand what a circular economy force is before you invest it. And that is, I think, an important aspect of it.
Yeah, I think really good points, and I think a lot more on the horizon with respect to circular economy and its role in the future, clean energy future. I think one thing we haven't very much touched on yet is emerging markets, emerging economies, right? So, Archana, maybe you can talk a little bit about some of these issues and comments that you've heard, but in the context of how do we also think about, call it capitalism or economic development, maybe more broadly too, as we think about these emerging markets. How do they play a role in that clean energy future?
Absolutely. So I'm going to backtrack 10 seconds just because I don't want to put emerging and frontier markets all in one bucket. Obviously, these are separate countries, different political situations, different levels of maturity, different dependencies on oil, obviously very important right now. And so when I do talk about general things, I do want to acknowledge that everything doesn't fit in one bucket. And something that might be a developing market in some cases may not be considered that in other cases. So when I give examples, I'll be specific, but when I'm making general comments, if I say emerging and frontier markets, please acknowledge that I don't mean to generalize across all of them. So that's just housekeeping. I think from an emerging and frontier markets lens, when I was invited to talk about this, one thing right off the top of my head, I was like, this is not even a conversation that emerging and frontier markets have the luxury of having. Degrowth is just not an option. You know, we've all heard the stats. There are so many billion people living in poverty. There's GDP growth that needs to happen in many of these economies. And not only that, but these markets are not the emitters of the world, but actually are providing solutions to some of the low carbon solution products that we need, right? So if we think about battery storage, if we think about EV technology, if we think about EV charging, if we think about just generally renewable sort of products, the picks and shovels of solar, where is that all coming from? That's all coming from emerging and frontier markets. It's not just the critical minerals that you see in, so the DRC or in Chile for lithium or Indonesia for your nickel. It's more than that. It is value up. It is value up of basic materials, but it's also innovation and technology. And not only are they using that in their own economies to grow and create jobs and so on and so forth, but a lot of this is getting exported out to the US and Europe and the Western world at a lower cost than can be produced locally. So I'm taking a very strong stance on this because oftentimes the conversation is kind of emerging markets is the problem as opposed to, and I just want to highlight so much of the solutions are coming from these countries, not just in climate, but you could argue that across financial inclusion, leapfrogging technologies. You don't have stranded assets in many of these countries, so you don't have to go through sort of that process of, killing legacy and dealing with policy that's not supportive of adopting new technologies. What was your other question?
Well, just maybe a follow-up on that is, so since we're talking a bit about capitalism today, and we've brought that up in different contexts, so how much is capitalism going to play a role in those emerging markets as they move forward?
Absolutely, and I'll qualify also that by saying that's the seat I'm in, so I'm going to talk my book, if you will. But capitalism, I think, and Kate, thanks so much for bringing up what is the definition of capitalism. I think capitalism plays an incredibly important role. As Chris was saying, it's an efficient allocator of capital because there's accountability. As opposed to public investment, public capital, think governments, think IDBs, things like that, that maybe are not as accountable, not as efficient. And so I think of stakeholder capitalism, or a new term I learned today was governed capitalism, where there is accountability not just only to the shareholder, which we adopted in the 70s after Friedman, but actually to the whole ecosystem. And so when I say I'm talking my book, I invest from a sustainable lens, and that's what I think is effective. So I agree with Aniket also that there are incentives, and many of those incentives, especially in emerging markets, come from governments. You think about China's 5-year plan that they just announced, grid, infrastructure, smart technology, renewable energy, all these are in China's 5-year plan that they are mandating. And now you crowd in, sort of private capital into the system, and you see companies now, in my portfolio that I'm very excited about, that are actually working because you, as Aniket says, you now have the right incentives and the right policies and the right structures to incentivize that money to work. But I think that work has to be done by private. I don't think the public sector is good at allocating capital nor operating capital in an efficient way. So,
great. I think one thing, did you want to respond?
Well,
Go ahead.
I do want to respond, actually, because our friend here, Chris, said that, I forgot the words, but you said it's not working in Europe. With all due respect, Europe is going to hit its 55% greenhouse gas emissions reduction from 1990 to 2030. It's at 54% right now. It's 1% off. So, we throw around statements like it isn't working. What's not working? I mean, you're saying, it's working slowly. Brussels is slow. Sure, it's slow. But again, precision here is very important, not anecdotes. Here's a continent which put together is, $20 trillion economy, roughly the size of the United States, that is a 54% reduction of greenhouse gas emissions from 1990 to 2030. That's the path that they're on. They're on that path. That's their Fit for 55. This is what they were trying to achieve, which gets them to net zero, to neutrality by 2050, 2055. They have an €80 per ton carbon price today. That's been around since 2005. Are you telling me that you don't think that the EU carbon market works? I just fundamentally don't think that's true. So it is about balancing these things. And it's about the allocative efficiency that comes from markets, and it is about states setting the rules of the game. But we should be careful before we say that nothing is working when you have the numbers that say the exact opposite. So I would actually love to hear your thoughts on that, Chris.
A fair point, and I will say that, I don't know, Chris, if you can represent thoughts around all of Europe, but I will.
We heard that it's not working, so what's not working?
Fair point, so go ahead.
Numbers.
The speed of it is not working fast enough. The slowness of it, okay, it has some initial savings. The low hanging fruit has been picked from the tree. That already happened. So that was the initial jump. But now to go to full carbon neutrality, the economy itself is screeching under that pressure. There's also, with those laws, there is a huge pressure against it. So there is a huge countermeasurement now of people saying, oh, let's just burn all the sustainable things because it's weird and it's impacting me. So it's also, and that is going to, so it's slow, and secondly, it's also pushing people a lot against it. And then you can get, we luckily don't have one president, but you get that counter reaction that's, and you see it in every nation happening against it. And that is then again slowing it down.
So you're saying it won't work in the future, but up until now, we are on pace. So I'm just trying to understand your argument. So we're saying that it's future.
Indeed, I think the capitalism way of doing business here, like in the States, the pure that brings speed, that brings scale, that brings real change in the world. And I think you need to combine that with indeed the first right selection and ideas, but to go through a complete sustainable world we still have a long time to go. And even Europe is a very small asset of everything, so it needs to be a global case.
That makes me think of what you were saying, Kate, about we kind of got to a point, right? You talked about the Berlin Wall and that being sort of an inflection point for us, and kind of now then entering a new phase, and now maybe we're in another new phase. I don't know if you want to expand on that.
Yeah, on similar themes, and just to tap into this conversation as well, because I think, the title of today's talk is Degrowth versus Green Growth. So, I do want to talk about degrowth for a second, which I am not the sort of, best spokesperson for degrowth. It's, I have a lot of respect for people with those ideas, don't necessarily identify with all of them myself, but I do just want to clarify briefly, degrowth has always been targeted at very wealthy countries, right? And so the idea has always been for generally very rich countries like the United States, like many countries in Europe, which have reached a certain level of development. What does it look like to start scaling back greenhouse gas emissions? And what I find one of the most compelling parts of the degrowth critique is that growth just doesn't tell us very much, right? Growth is a sort of absolute number. If there's an oil spill, growth goes up because people have to clean it up. And so, we have to think a little bit about what the content of growth is. And to come back to the conversation we were just having about Europe, what needs to be degrown, right? And so I think it's not to say that the entire economy has to degrow. That's not really what degrowth advocates say, but that certain parts of the economy have to grow, and certain parts have to degrow. We have to have less fossil fuels, for instance. We have to have fewer internal combustion engines. We have to have fewer things that run off of fossil fuels, right? And so that is, I think, the part of the equation that tends to get left out when we talk about green growth, right? Because we can talk about the good stuff, and there's a lot of good news on that front, right? There's a lot of good news, especially if you look outside of the United States, about how cheap solar is getting, about how cheap wind is getting, about the sort of proliferation of very, very good low-carbon products around the world, which is, again, is hard to see from the United States. But on the stuff that needs to be degrown, that is a much tougher conversation, and that is what is not happening, and those industries are putting up a hell of a fight. So if you look at Europe, right, like the German auto sector is putting up a crazy fight against EU auto emission standards, right? You have coal sectors in Germany. You have like really sort of big entrenched polluters all over the world. And that is a really tough nut to crack. And I think if we are only focusing the conversation about what sorts of things we need to, what sorts of goods we need to proliferate, that doesn't actually help us figure out the problem of degrowing the things we need to degrow, because that is not like, I think a sort of utopian capitalist would say those two things will work out, one thing will go up, one line will go down. That is not how it happens. If we can have all of this growth in solar and wind and renewables, and that can be totally additive to a fossil fuel system which continues to grow, because that is how countries grow. And that is how countries have grown. We have not figured out a way to not do that. There's progress, but for now, that growth is additive.
So what evidence would you look for that we're moving in the right direction, that balance is being achieved?
Well, we're not. We're not being.
How do you know we're not, right? Because you're evaluating something, right? And so what evidence would you look for that says maybe we are? Or that we should strive for?
Is coal declining in a meaningful way at a global level, for instance, right? Is
overall
fossil fuel use
overall
declining. Yeah. Are emissions going down, right? Like that is, I think, the standard we have to hold ourselves to. Are emissions going down? Is that happening or not? And that is a really hard standard to me. And I think just, makes the challenge look as realistically difficult as it is.
Yeah, go ahead, Chris.
So to counter argument that, it's if you're doing the degrowth element and you're going to say, hey, your industry needs to degrowth or you need to do less or whatever, you're going to make people very angry and they will fight you very hard. So instead of calling it degrowth, it's just like, this is a new opportunity and we need to really, I find you need to be aware of those human reactions. If you're saying what you do needs to stop, people will fight back. So we need to not do that because it's just not productive.
How, can I ask a question? How do you get rid of fossil fuels without making people angry?
by just making it cheaper. Solar wind is cheaper. So just doing that, letting it go, and it will work out, and explaining how much more money you can make by going electric or going with solar. Just explain this is how much money you can have. These are all the opportunities, and then you have more money to do this, whatever you want. Have fun with it. That's how you convince people and don't get them into a fight reaction.
I don't know if the head of Aramco or of ExxonMobil will find that logic compelling.
But can I answer in a very cheeky way? Have an oil crisis. That's what will get people not wanting to use fossil fuels.
Is that something we can design?
No, but we are in the middle of potentially.
Well, that's true.
We don't
yes,
know.
Given
but
I
said, I was a very cheeky answer. But actually, energy transition, as we know it today, or as we call it today, came from energy security initiatives after the OPEC crisis of the 70s. So it was a fossil fuel crisis that led us to think about energy security that we now call energy transition. I mean, all the words are what they are, but it was around energy security. And the amount of progress we made since then doesn't feel like a lot, but it was a crisis that got us thinking. And I want to believe that this crisis, be it short or long, will make us, again, as a world, think about energy security. Because oil is traded. Solar is not really, you can localize your generation and transmit it. So anyway, my cheek answer. I apologize.
Annika, it looks like you're itching to get in there.
No, I think these are all very important points, and Archana is correct. The best book about this topic is How Solar Became Cheap by Greg Nemeth. He's a professor of political science at University of Wisconsin. We've spoken to him at length, and he talks exactly to Archana's point about actually the important role that Nixon played in all of this in the U.S. solar industry, which then went to Germany, and then China scaled it from there. It's just important to note, though, that this notion of making, an oil crisis is another way of saying making oil more expensive. That's another way of saying putting a price on an externality. That's what carbon pricing is. You learned about that in Econ 101 because Bill Nordhaus started writing about social cost of carbon in the 1970s and won a Nobel Prize in economics for it. So, we don't need to rehash some of these things. We know this. This is all basic stuff. This is why today 30% of the world has a carbon price on it. That number was only 5% in 2015. Now it's not 100%. And the weighted average price per ton of CO2 today is only $5 per ton. Nowhere close to the hundreds of dollars that are needed. But to go back to the exam question, because we should be precise here, if we're talking about the allocative impacts of markets, the market is fine at allocating capital, but again, you put the guardrails on from policy. That's the whole point. And so the focus should really be on the state, because this is that is just a huge question. Now, is it hard to do this? Sure, it's really hard. But because of major government involvement, I've written 10 notes about China's 5-year plan. China is $1 trillion out of the 2.3 trillion. That's not the market that's not people just being like, oh yeah, I'm going to make a lot of money. That's the state saying we're going to direct this. And by the way, what China does is much more than just that. It's a whole of government approach from the central bank all the way down of how they get $1 trillion to go into low carbon. And so again, I just find these conversations to be useful in precision as opposed to in abstraction. I used to spend a lot of time with this crowd, with the Degrowth crowd, because it's really fun sitting, drinking lattes and talking to Jason and Georgios. These are brilliant guys. By the way, lovely people too. Just genuinely lovely, good-hearted people who are trying to think about these things. But it's in the realism where these conversations happen. So we should have a question: how do you get a $150 per ton carbon price? How do you get $1 trillion IRA kind of program? How do you increase R&D into low carbon technologies? There are policy instruments for each one of these things. This isn't abstract. You can do this. It's happening right now. And very importantly, and this is why I push back a little bit to Chris, we need to actually understand what is working and what isn't working. Because if you're going to just dismiss, you ask, where are places that it's working? Europe is actually decoupling GDP growth with CO2 emissions. It is happening. It's not relative decoupling, it's absolute decoupling. It's happening. Is it happening fast enough? No, and that's a very good question we should be having. But it is happening. To the point about and I agree with Kate about the metrics, the pace at which CO2 emissions are growing is slowing down. Now, that's maybe not a win, right? Because we want to peak. But to say that nothing is happening is just not true. China has most likely peaked emissions. That's like an unbelievable thing, that China may have peaked emissions in 2025, if not in 2024. And so, again, I, as an analyst, as a Wall Street kind of person, I look at specifics here, because then you can start putting together a compass about where we need to go in the future. And I'm sorry I sound like a broken record, but otherwise I fear that we'll leave these kinds of conversations even more confused, and I don't think that's the goal, at least not for me. Yeah.
So I like these specifics a lot, and thank you for bringing them in. But if the government needs to fix it, it also takes away the responsibility of what you can do as an entrepreneur, as a person. And I think it's both sides. So I agree, carbon prices and some of the things in Europe is what has been done is good. Learn from how it creates a counter reaction that could completely wipe it out. Learn from that, I would say. But also motivate and incentivize people to build the in hardware the next Teslas, not the funnest guy, but those companies need to be built, and that is also part of a solution. And we need to not only wait for the government to fix it, because that's too slow. We need to speed up.
I'm going to inhabit my anti-capitalist role on this panel a little bit, and cast a little doubt on the powers of private ownership. I've been spending a lot of time thinking about the auto sector. In the U.S. and globally, but mostly the U.S. so far. And I think this is a great example for what is the role of innovation, what is the role of government, right? Because we had, this $400 billion package, the Inflation Reduction Act. A lot of that, the sort of star of that show from the perspective of the Biden administration was the U.S. auto industry, right? To invest in battery technology, to invest in EVs, to invest in all this stuff, and they did, right? They announced all of these investments in factories mostly across the South, mostly in non-union states. That's another conversation. But they announced investments. It looked like all the GM executives got up and said, and Ford and Stellantis, and they said, we're going to invest in EVs. Biden is voted out of office. The IRA is rolled back. Turns out there had not been the work done to create a market for electric vehicles in the United States. And all of those companies have announced that they're rolling back and writing off those investments, accepting billions of dollars in losses each, because they don't plan, right? They don't have a plan. They are reactive entities, right? These big historic companies, these sectors that are so important to the sort of story of America, are not forward-thinking beings, right? They don't really know how to look 10, 15, 20 years into the future. That's not true, I think, and I am not one of the 900 China experts here, but I don't think that's necessarily true of China's auto sector. But in the United States, these are very short-termist beings, and they need government involvement in order to make them competitive in a global market, right? We're not just talking about making them do the right thing vis-a-vis the climate. We're talking about making these companies long-term viable. Stellantis and Ford and GM in the US, they are only making big gas guzzling trucks and SUVs essentially, right? And that is a limited market, and they face a really uncertain future. The German automakers, the Italian automakers are in a slightly similar situation right now. But without that really strong government push, regulation, subsidies to force them to do it, that's the only way they're going to do it. And they don't actually have a good sense for their own long-term survival. And we've seen that over and over and over again in the US.
I think, if I may, so I couldn't agree more with you. I agree that you do need incentives. And just on China, again, not an expert, but just from history, China's sort of invested in the EV sector or EV technology because they knew they couldn't compete in ICE. That was their answer to, well, we can't compete in combustible engines, sort of regular cars, so we're going to become the predominant sort of player in the global market on EVs. And that's how China became what they are in the EV market and innovation, technology, and we're all seeing what's happening there. I think I would say there's one more piece to the U.S. Sort of comment that you made, that you have incentives that kind of went away, but you also need sort of a supply and demand dynamic, right? So if you're supplying the EVs, but you're not incentivized to buy them also, right? You then you have cars in showrooms that are just sitting there that are not selling, and so therefore EVs don't work in the U.S. You also need the infrastructure around it, right? So we don't have charging infrastructure in our country. So, and if we think about it, we're driving sort of culture, right? So we're driving from, Boston to Chicago, whatever. And if you don't have the charging infrastructure, suddenly that becomes hard to own an EV, because how are you going to charge it? So I think you can't just focus on let's produce EVs, hopefully people will buy them, but there needs to be the subsidies to own them, and then the infrastructure to actually function. And then the last piece, and this is anecdotal, excuse me, Annika, don't come at me. Apparently the first car that most people or most young people in the US buy is a secondhand car for like $5,000. You're not going to find an EV of that price. So that goes back to the culture, the car culture, and how you buy a car in the US, which is a lot more complicated. And that's I just wanted to add those pieces to what you're saying.
Totally. And just briefly, I mean, I think that is one of the shortcomings of the Inflation Reduction Act, right? And this sort of asset price inflation based approach to climate politics, right? Because you can make a lot of EVs, and transportation is still the United States' biggest source of emissions, and that, you can make a lot of EVs, and that will not necessarily bring down transportation emissions anywhere near the scale that it needs to on the timeline that it needs to. That means public transit, that means mass transit. Those are public solutions that the private sector is probably not going to build a bullet train across the country. It's probably not going to make train travel at the level of Italy or something, right? And so that is where the public sector comes in. That is just not an asset that you're going to convince a lot of people to invest in easily, at least not on, again, the sort of strict timeline that we're working with.
It's complex. Chris, were you trying to get in? And then we're going to move to questions.
So I want to add it to it is natural selection, actually. So if the US doesn't evolve quickly enough or fights enough, I don't care. Nothing bad against you, but sorry, you're going to be replaced.
There are consequences to that, is what you're suggesting.
Yes.
Economic consequences.
Economic, and then you're going to, all the cars will come from China. Fine, if the sustainable solution is there, and that is, and sustainability is linked to resource efficiency. It's just more cost efficient to do it with solar and wind than with pumping up dinosaurs. Okay, and that's how it wins. And so whatever we can do to accelerate the transition, and that is what we need to do. So my point is, how can we go fast enough? My kids become every year a little bit bigger, and they're edging closer to the question, okay, what did you do about it? So we need to speed up the elements, and capitalism a way to speed it up. It's the fastest system that I know to adopt change.
I want to echo that, which is to say that I want people to at least understand my perspective very clearly. Capitalism, innovation, new ideas, entrepreneurship are all extraordinary. There really is. And by the way, I'm a managing director at one of the largest investment banks in the world. I'm in the middle of this every day. New ideas, new entrepreneurs, new business models. And by the way, the United States is special in that ecosystem. It is. And as Jeff Bezos says, there's no country in the world where if you have an idea, you can get $100,000 to start that idea up faster than you can in the US. That is we have many faults. That is one great thing about this country. The reason I don't spend too much time talking about it is I take that as a given. To me, that's a given, that people are entrepreneurial. If the incentive structure is there for them to make a great business, they will make it. I believe in that way that the market is effectively efficient. It's not perfect, but if you see an opportunity to make money, you will go and build a business to make money. Not you all in the room, but someone will. I see it every day. I'm sure you all do. That's the way that markets work. My thing is, can we set the rules of the game so that more people start those companies? So more EV cars get made and sold. That all requires very sophisticated public policy. It just does, because climate change is an externality that has to be internalized. That is a policy mechanism. We talked about the IRA. All the IRA is all it is you're putting $1 on per ton of CO2, but you're doing it through subsidies as opposed to the European model, which is putting a price on it. It's the same economic concept. It really is. It's just you're putting a value on something and you're pricing it in. This is making green things cheaper. So I just feel like what is often missed in these kinds of discussions is that there is a smart set of policy interventions that can happen. It's hard to do. But by the way, it's really hard to build an EV car company too. That's really hard. Believe me, like if you spend time at Tesla and you looked around, you saw what Elon Musk has been able to achieve there. I know I don't love Elon Musk. I'm just saying there's something to be learned from that. He's in some ways a genius when it comes to manufacturing. Just like that is genius, there is a genius level of policy that can happen. And I feel like there's not enough time being spent on that, and there are models, and we shouldn't throw out the baby with the bathwater. And for every government investment that leads to Tesla, there's a government investment that leads to Solyndra. That's true. It will happen. Government won't be the best. It will lose money. You know what? My clients at Jefferies lose money all the time. That's just part of the system.
Well, great. Good to know that there are winners and losers out there, perhaps. It's a way to look at it. Let's go ahead and open things up to the audience. If you're here in the room, we have one microphone set up in the aisle, so please line up behind it. And once your turn, share your name and affiliation so we can get to know you a little better, and then your question. We'll start with 2 questions. We may only have time for 2, so you may have we'll see where we can go, and then we'll take a question from those joining us online, and we'll continue alternating if time allows more. So you get the first in-room question.
Thank you very much. This is it.
And your name and
Press the button.
and affiliation. There we go.
Eduardo from Brazil, and I study here in CIPA. Just came from a class with Aniket Shah. My question is, considering that maybe China is the best example now in the world in terms of solving climate change and promoting growth and development, I've been asking some professors here in CIPA, what can we learn from China to other countries like Brazil or US or Europe? And they say, oh, it's not replicable because they have a very different political system. But I don't like that answer, actually. Something can be learned, right? So that is my question for you. What can be learned from China, and how can we adapt it to other countries?
And all the panelists don't need to answer every question, so whoever would like to jump in on that.
Sure. I mean, I agree that it is a different system, but I think what we take away is, I think what we've been saying, and Annika has been emphasizing, is that you do need policy and incentives, policy really to start to incentivize private capital to come into a space like low carbon products and services, innovation, things like that. Because there is, I mean, to me, these 5-year plans are really incredible because they are very specific on what they want to achieve and almost a roadmap on how they want to achieve it. And now you are giving a company a roadmap to say, okay, if I invest in this, this will happen because capital will be allocated towards it. So I think that is a takeaway. Now, how they achieve that is maybe a top-down mandated approach, which is different from maybe how our political systems work. But you can't take away from the fact that this is effective in getting things done in a fast, efficient way. We may not agree with it, but it works as far as I'm concerned.
I think that's a great point. I was just in China and was super impressed by how fast the clean energy transition is going. So, okay.
China is not perfect on climate. China is the largest emitter. China's per ton of CO2 emissions, per capita CO2 emissions are very high for its GDP growth. So don't take, at least what I'm saying, as China has figured it all out. That would be the wrong takeaway completely from this. But I like, good student, Eduardo, is what can we learn? I'll add something specific. Wonderful paper recently published by the London School of Economics about the People's Bank of China and the role of PBOC on green lending. Fascinating. And the bottom line is, in the West, we believe central bank independence is very important. You saw this recently with the nomination that President Trump had for Fed chair. China doesn't believe in that. They don't believe in central bank independence. They say the central bank should take the direction of the central government. So you have PBOC, an incredible set of interventions of how banks are regulated by the PBOC to lend to certain sectors.
So you advocating for that?
No.
Okay,
He's
just
asking. No.
checking.
But I'm not. No, it's not about. The question was about what can you learn, and it's about expanding one's thinking about the set of tools. And by the way, just if I may, when the United States has a big financial crisis, look at what the Fed does. Go and study Fed response to 08 and to COVID. We throw the kitchen sink at problems. So even we here have a questionable response to central bank independence. China is just doing that with regards to green. And I think that's something very specific people can study.
Different approach. Yeah. Okay. In the room.
Hi, my name is Genevieve Gunther. I'm the director of an volunteer group called End Climate Silence, and I'm the author of a book called The Language of Climate Politics. And I'm going to pull on a thread that Kate Aronoff started to unspool, but I'm not going to use the word degrowth. I'm going to talk about stranded assets. I think that climate change is a really unique problem because it requires the destruction of multi-trillions of dollars of capital, which is to say it requires the phase out of fossil fuels, which is the biggest infrastructure on the planet. And that kind of devaluation will, of course, ripple into equities and credit markets and have, potentially catastrophic economic effects for labor and, for all sorts of sectors. So my question to the panel is, how does capitalism suspend the private property, tell oil and gas companies they are not allowed to burn the reserves they claim to own, and manage the destruction of tens of trillions of dollars of capital without some sort of state planning, perhaps even on the international level?
Great question. I can speak to some parts of that, which is, I think, one way in which the United States is strange is that most other major oil producers on the planet do have a state-planned oil sector. If you look at, virtually any other major oil producer, there is a much higher degree of state involvement, generally, if not outright state-owned producers, which are complicated beasts that are not worth sort of replicating from whole cloth in this country. But the United States just does that in a different way, right? We subsidize the industry. We do a lot of basic research. The fracking revolution is in many ways the product of public policy, very patient public policy since the 70s, around the time of the oil crisis, where we decided to invest in stuff that just wasn't profitable, that companies knew how to do, but just didn't want to invest in because they weren't making money from it. So we have all of these levers, including like Fed bailouts of oil companies, which happened in 2020, that are interesting tools that we don't think about very much. It is a very sort of overdetermined sector when it comes to the state. And so I wrote a paper to this effect for the Roosevelt Institute a few years ago. But when there is a crisis, right, when you have a moment of devaluation like happened in 2020, chances are these companies are going to come crawling for a bailout, and you can impose terms, right? That is a very standard thing that governments do. And so what are the sort of terms that you impose when they say, give us buy our bonds, right? Take these stranded assets off our hands, which we do every year through these sort of depleted oil wells. So I think that is not a full answer to your question, but I think there are just a lot of tools and a lot of public policy that goes sort of under the radar that shape our fossil fuel sector and create interesting opportunities to think about what to do with those assets, particularly when these companies are down.
Thank you.
I do. Sorry, I think it's a great question, really a wonderful question. I would just say that from my humble perspective, the financial assets of oil and gas isn't what keeps me up at night. In the equity market in the US, which is the largest equity market in the world by far, fossil fuel companies are 2.5% of all global equities. Now in the debt market, it's a little bit more, but we have that kind of volatility every single day and no one really cares. Like the markets go up and down. On physical infrastructure, that's a different point. So there's a lot of physical infrastructure around energy. Yeah, I mean, you have stranded physical infrastructure. It's not an easy problem, but it's a solvable problem. I think the question about phased, how do you make, I think the question of like, how do you actually get it into a phase down is really by the demand side as opposed to the supply side, which is you have to bring the demand of these products down. And so one of the points that Kate mentioned, which I wanted her to speak about more, and maybe we can talk about it later, but is it possible to actually run a $120 trillion global economy with less fossil fuels? That is a core argument of Jason and Georgios and the degrowth crowd. They say no. The proof is that you need fossil fuels to run it. And that's a question that we should be debating. Is it possible? Now, if you have technologies that can replace it, then it's prima facie not impossible. But today it is. But just to answer your question, I, as a finance person, am not worried about the financial elements of this. It doesn't keep me up at night.
Great. I want to make sure we get to the online questions, so I think Jess is going to come up with that. And while she's coming up, I don't know if our panelists can stay after, but if they can, I will volunteer that they will stay if they can and answer some questions if you have them. All right, go ahead, Jess.
Thank you. Quoting the question, I didn't hear any discussion regarding environmental justice and economic justice's connection to racial justice. What are the presenters' thoughts on this connection in relation to degrowth, green growth?
Thank you online for bringing that up. It was one of the questions we didn't get to, but would anybody like to talk about this in the context of environmental justice?
I can just briefly. I mean, we talked a little bit about externalities, and I think in the sort of terms of environmental economics, an externality tends to be pollution. It tends to be these things that companies, for whatever reason, don't want to account for on their balance sheets, so they push them off, usually onto the public sector. Those are deaths. Those are, in many cases, elevated cancer risks. Those are rare sort of respiratory conditions that are debilitating. And I think framing that around the sort of like market logic, I get why it happens, and I think there's a time and a place for it. But I think it is just worth keeping in mind that when we talk about externalities, in many cases, what we're talking about is human lives. And those are concentrated in this country and in working class communities of color. And I think, again, one thing that we sort of leave out when we focus a conversation about climate change around sort of asset price inflation is the fact that people are dying right now, not just from climate change itself, but from the fossil fuel economy, which is an expensive, messy, deadly thing. And that sort of continuing to operate just is an externality machine. And I think the framework of externalities, which is a great book by Alyssa Battistoni over at Barnard, that goes into this, Free Gifts, that sort of covers this at more depth if people are interested. But I think we really need to think about human beings in this equation and sort of not look at the climate challenge as sort of a matrix of assets, even as people whose job it is to look at a matrix of assets are very important and do great work. But I think we really have to think about actual human beings who are dying.
If I could just add, so I didn't address environmental justice specifically, but you raised human beings. And I know I've been defending or sort of maybe defending, but just promoting emerging and frontier markets as this great green growth sort of solution provider. But I do want to be very careful to not just wax poetic about it and acknowledge that there are things like human rights that are a big issue in many of these countries and many of these industries that, that we benefit from a green growth perspective, that need to be addressed, that need to be acknowledged and, are not without consequences. So I just want to put that out there. Different conversation, but still.
Thank you. Important point. I don't think we're going to get to the questions. I'm really sorry. It's great to see such engagement. I do like to give our panelists sort of the last word, if you will. So I'm going to ask you to sort of keep another lightning round, keep it to 30 seconds or so if you can. So my question is, if you had to pick one near-term action that those in the audience, for example, could take, or maybe businesses that they know of could take to really accelerate sort of climate solutions, what would that action be? So anyone want to start us off? Chris?
I want to jump on the idea. What makes America very cool is the speed that you are entrepreneurs and scale up solutions. So around the world, you have entrepreneurs building stuff in ecosystems, and they're helped by the government locally to do that. Wonderful. Import those entrepreneurs, import those business models, invest in those things, find them, and give them a market like America to scale up fast. I think that is because the solutions out there, it's about how fast can you scale it up. So use your strength as a company, as a country, and leverage that. That would be a great asset.
Global entrepreneurship. Okay. Others? Kate?
Join the Democratic Socialists of America and tax the rich. Yeah, join a campaign to tax the rich because we have an eco-socialist mayor. He's identified that way in the past. And we need to tax the rich in order to realize that agenda.
Okay. All right. Global entrepreneurship. Tax the rich.
Right here. Yeah.
Next.
So there.
Okay.
Archana's my client, so I defer to her.
That's why he's been holding off.
I see.
No, I mean, I think practical solutions are just awareness. And I think, we've raised it a couple of times, is context and awareness for me when I'm thinking about these things or talking about these things, is just what are you talking about? And have you thought about the entire ecosystem when you sort of suggest something? So I think for me, it's a little ethereal. It's awareness and context.
Great. Okay. Awareness?
Again, I would just say understand the policy toolkit for climate. Understand all, and look, take my class, which gives you some of it, but it's not perfect either. Understand all the ways that the state can direct capital through incentives, through subsidies, through industrial policy, because we're going to see a lot more of it in our lifetimes. We're just at the beginning stages of industrial policy this time around.
Great. Policy toolkit. Okay. Well, thank you all. This has really been a thoughtful and very rigorous conversation. So that's what we were looking for.
I read your stuff very closely and a big fan, so thank you.
I really felt like you all brought clarity and a lot of vigor and candor to the conversation. So thank you for that. Conversations like this really only work when we're prepared to, I'll use Annika's term, to be precise and also be prepared to listen. So thank you. Just a quick thank you also to the Columbia Journalism School, especially Marguerite Holloway for helping make tonight possible. And thank you to the team that helped make tonight run smoothly and for being part of the Perspectives Dialogue series. So have a good night.